Let's talk to Patrick Reid. He is the co-founder of Adamis Principle. Very good morning to you, young Patrick.
Hi Nick, how you doing?
Living the dream. It's Friday. Right, we've got 3 thought-provoking slides to run through. Let's kick off without further ado, the Euro-US dollar weekly chart. What are your observations?
Okay, so I came in 2 weeks ago, quite bullish euro dollar. This week, quite a few desks have been saying, "Oh, the dollar's got the upper hand." You know, everyone's thinking the euro dollar is going to go south. Let's keep it real, okay? Euro dollar has weakened this week, a whole whopping 75 pips.
Right.
Yeah?
Okay.
Yeah. Wow. Yeah. So, you know, this is the weekly chart, and this just kind of shows you we kind of opened around 123.15, and we're sat around 122.40-ish area. This is just very, very tame. We're still ranging. We're still ranging from 121.65 all the way up to 125.50. We're consolidating at the highs. We're above some key levels. So in that respect, nothing has really changed my view.
Okay, well, let's drill into the daily charts. Are there any clues in terms of what's going on the daily bar?
Yes, absolutely. So let's as you say, let's drill it down. The key level I'm buying into is 121.65 and 121.50. This is the line in the sand, bullish above, bearish below.
Okay.
So the key thing here is we are at the edge of the value area. We've done a lot of volume, a lot of business for all those market profilers in the futures pits. We really are at the edge of the value area. We're consolidating at the highs. And sometimes when there's a lot of desk talk saying this, saying that, I keep it real. Just look at what the chart is trying to tell you. Okay, so are we above the 38% from October 17? Yes. Are we above the 100-day moving average? Yes. Do we have a double bottom on previous lows? Yes. Are we defending those? At the moment, we are. The key thing to remember is if 121.50 breaks, I'll get my coat and I'll get a taxi. I'll turn off the lights and I'll go back to school.
Okay, well, you couldn't be fairer or clearer than that as a sort of, well, basically a key chart point. Let's move on to the third slide. Patrick, what's this telling the crowd?
So this is a CLO issuance. So CLOs, in my mind, are kind of a safer version of a CDO.
Okay.
So a CLO is basically a collateralized debt obligation. Collateralized loan obligation.
Yep.
These are kind of secured loans, or they're vehicles to manage leverage loans. So, you know, we talk about the LIBOR OIS spread. We talk about you know the CDS index ticking up. We're talking about a bit of the credit space, a bit of the stress in banks. It's not that case in the CLO space. They're still issuing. It's still marching on. The only thing I will say is, I try and think of it as a holistic thing. I keep a lazy eye on all of these indexes and all of these high yield credit spreads, because when it doesn't matter until it matters.
Understood. So just in summary, okay, we talked off air that basically the equity markets were having all the fun in the last week or two, and the FX guys were saying it was pretty dull, pretty choppy. Moving averages, a lot of sort of technical people have come on and talked about the 200-day moving average. As a generalization, is that something you look at, okay, whether you're looking at it holistically or not?
Yes, absolutely. It's an absolute, almost bulletproof level for me. It's a key indicator. But the key to think about a 200-day moving averages is how many of these averages are being met at the moment. So you don't just have the S&P. You've got Google. You've got some other some other key fangs. You've got obviously in the FX space as well. So these are all key moving averages, and when they all come together at the same time, talk about S&P in particular, there's a big old ding dong between bulls and bears.
Yeah.
Someone's going to lose out. So I think below these below this key level, there's quite a lot of clear water. That's the key. This is a kind of, some would say, the last chance saloon for bounce equities. So this is why it's important. It's not just because it's a good level, it's because there's clear space below it, not just with equities.
Understood. Well, the final note on that, I read with interest this week, somebody said, in terms of the 200-day moving average, a break below, ignore the fundamentals, the momentum sellers, the algos will come in, okay, and sell a break of the 200-day moving average. Patrick, lovely to talk to you. We'll talk to you in 2 weeks' time.
Thanks very much, Nick.
Thank you.